Ever walk into a room and feel like everyone's speaking a language you don't understand?
Yeah,
That's kind of how the stock market can feel sometimes, right?
absolutely.
Especially with all the rumors of secret strategies and tricks.
Mm-hmm.
So today, we're diving into some of those whispered stock market schemes and tactics.
Okay.
Now, full disclosure, we're not here to turn you into a Wall Street,
Well,
Wolf of Wall Street.
right.
More like we want to equip you to see through the smoke and mirrors.
Yeah, just give you the knowledge to, navigate it all.
Exactly.
Yeah.
What are some of the biggest misconceptions you see people having about, like, how the stock market works?
Well, one of the biggest ones is this idea that there's some secret formula
Oh, yeah.
for success.
The magic.
Algorithm. Yeah, like some magic algorithm or a crystal ball.
Right.
And the truth is, it's a lot more about understanding the game, its players, and honestly, our own psychology.
Oh, interesting. So let's break down some of these secrets that people whisper about.
Okay.
What's the first one that comes to mind?
Well, the classic one, people get those spam emails
Yeah.
that talk about a stock that's about to go to the moon.
Go to the moon.
Right.
That's the classic pump and dump scheme.
Pump and dump. Okay, so how does that actually work?
So imagine someone, right, they buy a ton of some really cheap stock.
Okay.
And then they start spreading all these rumors, getting people hyped up about it.
Oh, so it's artificial. They're creating
It
buzz.
does. They might even pay some, social media influencers
Oh, wow.
to talk it up, make
Yeah.
it seem like this hot new thing.
Okay.
And then suddenly everybody's rushing to buy it.
Because they don't want to miss out.
Exactly. That fear of missing out,
Right.
that drives the price way up.
Okay.
And then as soon as it hits its peak, guess what?
What happens?
The original people, the ones who started the whole thing,
They dump all their shares.
oh, so they cash out.
Exactly. Leaving everyone else holding this stock that's probably going to plummet.
Ouch. That sounds a little bit like that game of hot potato,
Yeah, exactly.
where you really don't want to be the last one holding it.
Right. And nobody wants to be holding the potato when the music stops.
So how can you avoid getting burned in a situation like that?
Well, the key is research.
Oh, okay.
Always, always, always do your research. Don't just buy into the hype.
Right.
Look beyond that and really dig into the company's financials.
So what kind of things are we looking for?
Well, check their earnings reports, their cash flow, look at their management team, see who's running the show.
Okay.
The SEC, they have this database called ADGR. It's a great place to find all this information.
Okay, so ADGR, that's our friends.
Yeah, a good place to start.
Got it.
Yeah. Remember, a good company with solid, fundamentals
Yeah,
doesn't need all this crazy hype.
right.
It should stand on its own 2 feet. It's so true. Now, moving on to something that feels a little bit Matrix-like to me,
Okay.
high-frequency trading, or HFT.
Yeah, this one can be a little mind-bending.
It's like, those movies where supercomputers making calculations at warp speed.
Mm-hmm.
That's kind of what I picture with this.
You're not wrong.
Yeah.
HFT uses these incredibly powerful algorithms, right,
Right.
to make trades in milliseconds.
Millisecond.
Yeah, thousandths of a second.
Wow.
It's like playing the market at a whole different level.
Okay, so how does this impact the average investor? Is this a good thing? A bad thing?
Well, it's complicated.
Okay.
Some people, they argue that it actually adds liquidity to the market, makes it easier to buy and sell.
Okay.
But others, they're worried that it gives these high-frequency trading firms an unfair advantage.
Yeah, how so?
Well, because they can process information and execute trades so fast,
Yeah.
they can essentially front-run other investors, capitalize on those tiny price differences before anyone else can even blink. So it's almost like they're playing the game with, like, a cheat code.
It's a complex issue, valid arguments on both sides.
Right.
The bigger question is, are regulations needed to level the playing field?
Make it fair for everyone. Yeah.
Yeah.
Speaking of unfair advantages, insider trading. This one seems to make headlines pretty often.
Yeah, because it's straight up illegal. And for good reason.
Right.
Imagine someone gets a tip, right, about a company merger before it becomes public.
Oh, okay.
They buy a ton of stock knowing it's about to shoot up in value.
That's like betting on a horse race when you already know the winner.
Exactly. Total rigging of the system. And it's not just insider trading. There are other sneaky tactics out there, too.
Yeah. What else? What else comes to mind?
Well, there's something called wash trading.
Wash trading, what's that?
That's basically creating a fake illusion of high demand for a stock. It's like, imagine you walk by a restaurant and see a huge line outside.
Yeah.
You think, wow, this place must be amazing.
It's got to be good, right?
Yeah. Right. But what if you find out they hired actors to stand in line?
Oh, wow.
It's totally misleading.
So both insider trading and wash trading,
Mm-hmm.
they point to the need for, like, some serious rules and enforcement, right?
Absolutely, to protect the integrity of the whole market.
Makes sense.
Yeah.
Now, let's shift gears a bit and talk about something a little more exciting.
Okay.
Those shiny new IPOs.
Yeah.
You know when a company goes public for the first time and everyone's scrambling to buy shares?
It's like the hottest new club in town everyone wants in.
Right. But it can be a little risky too, right?
Definitely. IPOs can be exciting,
Yeah.
but they can also be very risky.
Okay.
Sometimes there's so much hype surrounding a company, it leads to the stock being way overvalued.
Oh, okay. I see.
Remember, you're not just buying into the excitement, you're buying into a business.
That's a really good point.
Take your time, do
Yeah.
your research, don't get swept away by the hype.
So it's like anything else. Sometimes the hottest new thing might not actually be the best thing.
Yep.
Okay, so here's a secret that often hides in plain sight, something that many people might not even realize is happening.
Okay.
Those sneaky mutual fund fees.
Ah, yes. Fees, the fine print of investing.
Right.
They might seem small, like, oh, it's just a tiny percentage.
Yeah,
But over time, they can really eat into your returns.
I see. So how can investors, be smart about these fees?
Well, first, you just got to understand what you're paying for.
Okay,
Is it worth it? Does the fund's performance justify those fees?
got it.
Not all fees are bad, by the way.
Okay.
Sometimes you're paying for expertise
Right.
or access to certain types of investments.
That makes sense.
Yeah, just be an informed consumer.
Be aware.
Exactly.
It's like that extra charge for guacamole,
Yes,
You might love it, but is it really worth the extra cost?
exactly. Yeah. You got to weigh those options.
Okay, here's a secret that might actually surprise you.
Okay.
Our own minds,
Oh, yeah.
they can be our worst enemy when it comes to investing.
It's so true. We all have biases, whether we realize it or not.
Okay.
Fear and greed, powerful emotions,
Yeah.
and they can really cloud our judgment.
So how do those emotions impact our investing decisions?
Well, we might panic and sell a stock when it dips, just out of fear,
Okay.
only to see it rebound later,
Oh, I've done that.
It's that classic buy high, sell low.
Right. That doesn't work.
Not a winning strategy.
Yeah. So how do we avoid those mental traps?
Well, being aware of those biases is a huge first step.
Okay.
Then it's about having strategies to manage them, maybe setting clear investment goals and sticking to them.
Right. So even when the market is going crazy,
Exactly. Don't let your emotions drive the car.
don't panic.
Yeah, have a system for evaluating investments based on logic.
Okay, so thinking rationally.
Exactly.
And finally, let's talk about companies that are a little bit, shall we say, less than transparent with their finances.
Yes. The
Yeah.
ones who like to keep their cards close to their chest.
Right. So why is transparency so important?
Well, lack of transparency is a major red flag. It
Okay.
could mean they're trying to hide something,
Oh.
or it could just be a sign of poor management.
I see.
Either way, it makes it really hard to assess the true value of a company.
That makes sense.
You want to look for companies that are open and honest about their financial situation, right?
Yeah.
They're much more likely to be trustworthy and make good decisions in the long run.
So it seems like these stock market secrets aren't really about some magic formula.
Nope.
It's about really understanding the game, knowing the players, and like you said, even understanding our own psychology.
Exactly. Knowledge is power.
Yeah.
The more you understand how this all works, the better prepared you'll be to make smart decisions.
Yeah, you've heard it here first.
That's right.
Information is power, and a healthy dose of skepticism never hurts.
For sure.
So keep learning, stay curious, and remember, when it comes to investing, there are no shortcuts to success.
Couldn't have said it better myself.
Well, that's all the time we have for today's deep dive, but keep an eye out for more secrets we'll be uncovering in the future.
And in the meantime, happy investing.
Happy investing.